lot of stuff got done. So let's hear what has got done and how we take this forward. Thank you. Next is Adel Al-Saleh.
Thank you, Hannes. Good morning, good afternoon, good evening, wherever you're from. It's good to be with you. By the way, we all feel like in a Deutsche Telekom pop band, right? We're all wearing the same jackets, and I promise you, we all have our own jackets, right? So no sharing. Anyway, look, it's been exactly 3 years since I stood in front of you, it was live, and talked about T-Systems. And at that point in time, when I spent time with you, I got many questions that said, look, we're not sure what T-Systems is all about. Why is it continuing to be a bleeding business within Deutsche Telekom? What are you going to do about it? How are you going to position the company? And 5 months into my role in 2018, I shared with you the journey that we're going to get into in order to clarify those questions and fix the business as we go forward. So what I'll do today is I'm going to share with you the journey and what exactly have we done. But also, more importantly, talk about what happens in the next 4 years in front of us. Well, let me go ahead and get started. So first of all, it's really important to say that the transformation that we put T-Systems on has progressed. And as a matter of fact, hopefully you realize after the presentation, what we have today is a very different company from what we had 3 years ago. Clearly, it didn't turn out exactly how we planned. So there were things that went well, the things that were challenging and we struggled with. But at the end of the day, the biggest thing that we've accomplished is a new portfolio for T-Systems that is 100% IT services focused company. So that's point number one. Point number two, different than what DT Group experienced, we actually did see a big impact from COVID crisis in 2020. After a very good 2019, a lot of our customers were hit. 60% of T-Systems business is concentrated in automotive, industrial, manufacturing, travel and transportation. The industries that were hit the most, if you will, with the COVID crisis. Many of our customers were shut down and not even able to communicate with us and not able to continue their transformational programs or the projects that they were on. So we felt that pain. And the biggest issue we faced, of course, is the revenue development in T-Systems during 2020, but also the delay in our transformation, which we, by the way, put on track as we went forward. The third point I hopefully will come across clear is, as we went through the 3 years, we have evolved our strategy. So now being an IT-focused services player, our strategy to be the European leader, especially when it comes to cloud transformations, cloud operations, digital enabler and digital solutions with secure sovereign capabilities that our customers are looking for. And I'm going to share that strategy with you and how we take the company going forward. The fourth point is we have a very clear roadmap how to build value going forward. We know exactly what we need to do to accelerate our EBITDA growth, and I will share that with you as well throughout the presentation. And finally, I will share the financial outlook, which we are confident in, to deliver 5% compounded annual growth rate through the planning period and get ourselves to a positive cash contribution. That are the key points, and now I want to get into the details of exactly what happened. Now, before I dive into all of the granular information, I wanted to step back for a second and share with you the journey that we've been on. And I look at it in 3 phases for T-Systems. Phase number 1, which was 2017, 2018, this is when I walked in, and a little bit before that I joined the company, it was all around stabilizing the company. You remember the troubled contract. I had a lot of questions from you when we got to May of 2018. What are you going to do about this contract? Is it more than your peers? How do you control it going forward? It was also about launching a new cultural transformation within T-Systems, to think differently, to modernize, to evolve. And we've done that through 2017 and 2018. I don't think you've read in the newspapers any of our troubled contracts since we met in 2018. We've launched a very ambitious cultural transformation where over 20,000 employees participated in that. We've enabled more like 70% of our employees. That was phase number one. Phase number two, and you'll recall it when I go to the next slide, was about this 4-pillar strategy, a tactical strategy that was focused on fixing the fundamentals with T-Systems. And that was 2018, 2019, 2020, and we're ending it in 2021. And we're now entered a new phase, which is where we evolved our strategy and evolving our business model to deliver a consistently performing company going forward. That is really important to visualize for us as we go now through the different areas. Now let's talk about the 2018 through 2021 phase, which was about the 4-pillar strategy. You remember, the 4 pillars were, number 1, fix the portfolio. Number 2, fix your go-to-market. Number 3, what are you going to do with your delivery? And number 4 was about your SG&A. What do you do with the overheads? Let me go through this very, very quickly. So first of all, on the portfolio, huge accomplishments here. One is we changed the business model of the company. We created a portfolio-driven logic where the P&L sat in the company, away from the divisional structure. We got clarity. Where do we make money? How do we compete? How can we grow? Do we have the right to play in some of these areas? And that drove a bunch of decisions, things that we stopped. For example, end user services, which is painful on the top line, but it was a business we decided we're not going to do anymore. And we continued to bleed that out from the company. Second was exiting some of the geographies where we didn't see future for us, like South Africa, like Malaysia, which we're in the final phases of exiting. We also did a very important deal, partnership deal with IBM, where we changed the fundamentals how we deliver mainframe services, changing from a CapEx-heavy model to an OpEx model, accessing technology as fast as it becomes available. But the biggest component of our portfolio was about moving the connectivity businesses from T-Systems into Telekom Deutschland. It was very clear to me, as soon as I started digging down into the organization, that the value chain of delivering TC services business was hugely fragmented in B2B between T-Systems, TDG, Global Wholesale, etc. And we decided as a team that it didn't make any sense. We're going to put it together with Srini, so he has the end-to-end value chain to deliver the services. And he talked about that yesterday. That was the big change in our portfolio as we went forward. The second area was about the integrated go-to-market. We were very fragmented in how we covered the market. We created an integrated sales force. We digitized that sales force through deployment of Salesforce.com as a technology. It's now a data-driven management of our sales capabilities. And very important, we rebranded ourselves, we repositioned ourselves. I don't know how many of you have seen the Missing T campaign, which by the way, won the Effie Award, which is a very prestigious award in branding and positioning. And we started talking about the connectivity, security, cloud, digital as our key portfolio elements. The third area was about our delivery. We were very heavy dependent on high-cost locations. And we set ourselves to make sure we change that. By, first of all, building up India, we went from almost 0 headcount in 2018 to over 2,000 people today. We're very proud of that team. We shifted a lot of our high-cost locations from a delivery into lower-cost locations. We declared that we have a 4-country delivery strategy. Germany, of course, as a foundation, but also Slovakia, Hungary, India, and Russia, where we have a lot of software development. And we started building scale in these areas. And that drove a lot of synergies across the company. And the last pillar, of course, was about taking cost out of SG&A. I focused initially at SG&A. I thought that was the first area we needed to address. So we looked at layers, managers, executives. We removed almost 40% executives from the company. We removed several layers of management, 4 layers of management. We deployed agile organization structures. We reduced our HR, finance, G&A functions by 30% plus. And at the end, we delivered 300 million net IDC savings. That's over 10% of our IDC capabilities in T-Systems. We deployed agile structure across the organization, so we work differently. And there's more to come in this area, but that was what drove our EBITDA expansion in 2019 of 17%. Now, all these 4 pillars, they were underpinned with our cultural transformation journey and a very tight management system to deliver. And that's what made the difference for us over the last several years. Now, that is just a quick summary. And I already talked about the 300 million net savings, and it was driven really by 4 key areas. Number 1, our sales organization. As we integrated it, we saw a lot of duplication and ability to take some of the cost out. Second was about delivery integration and moving things offshore into lower cost locations. We went from about 20% of low cost locations of our total population to 30% in 2020. Third was overhead reduction, we talked about it. And the last one was, of course, overhead reductions. And I want to highlight that not only did we take headcount out of Germany, about 1,600 net reduction, which is about 11%. We also took headcount, almost 2,000 people net from our other high-cost locations and moved that work, a portion of that work, into the lower-cost locations. That's what drove our IDC savings through the period. But we've had headwinds. I mean, I already said about the impact of COVID. The biggest headwind we have was the revenue development. When I stood in front of you in May 2018, I said, our plan is to keep revenue stable or growing at low levels, 1%. Well, we didn't get there. That is the big challenge. Now, one of the things, of course, that drove the revenue down is our decisions to exit certain businesses, like end user services. By the way, through this planning period, it was 180 million reduction on top line. Also, of course, the COVID impact that we had. But nonetheless, when you looked at the shift into the growth areas, it did not go as well as we were hoping for. It was slower. Although we had excellent growth in our public cloud, over 30%, very strong growth in our security. Our digital solutions was a disappointment, where we declined -2%. After growing first from 18 to 19, in 2020, we saw big headwinds for that. And our MIS business, our infrastructure business, declined at about 8%, but if you normalize for the end user services, about -4%. So that did not give us the growth dynamic that we wanted. Although we did shift more of our business into the growth areas, from 38% of our total business in 2018 to over 47% in 2020. And by the way, that will continue for us going forward. But that was our biggest challenge, because that 1% growth would have expanded EBITDA much faster than what we've seen. If you normalize for things, by the way, if you normalize for end user services, our revenue would have been -1% over the period, and our EBITDA would have been +1%. So, challenging period, especially in 2020. Now, let me go through the actual commitments that we made to you in May 2018 versus where do we expect to be landing in 2021. So first of all, our revenue growth. As I said, that is the element we did not deliver on, right? We're declining -3% compared to what we promised, which was either flat business or a +1%. Second was our EBITDA performance. We rated ourselves amber here because if you normalize for the portfolio shifts and some of the COVID crisis, we actually have a very strong EBITDA performance of +1%, given all of the changes that we were doing within the company. CapEx, we decreased our CapEx from a little bit closer to about 300 million run rate to about 250. And by the way, we expect to keep it like that. Our CapEx is between 5 and 6% of our revenue. I would like to drive it in the lower 5 and even below 5 as we progress this business going forward. Our special factors, we dropped it slightly from the run rates that we had, but we kept it pretty much stable throughout the period. So we did not escalate. After a big bump in 2019, we brought it down to exact levels that we were, which are about 160, 170 million. Cash contribution, I committed to you in May of 2018 that we will get the business to a cash contribution break-even by 2020. Well, in old T-Systems, when we still had the TC services, we achieved that. I would say we achieved that by hook and crook and different ways than what we envisioned, but we got there. The new T-Systems needs another couple of years to achieve cash break-even after we moved profitable business of TC into the TDG business. And of course, our indirect cost was better than what I promised you. We talked about 100 million of net savings in May of 2018. We delivered 300 million, plus more to come in the future. Our EBITDA margin, we expanded by 2 points, and our trim continued to be one of the best in the industry. We consistently score in the top quartile of our competitors with high 80s trim performance. So all in all, challenging 3 years, lots of things happened, a very different company we have today versus what we had in the past. We're proud of where we are, but we still have a lot of challenges in front of us to address. So we are not done with where we want the T-Systems to be. So what is the strategy going forward? So first of all, it's important to just step back and realize that we now have an IT services company focused on Europe and select countries around the world that is number 1 in Germany, that is number 2 in DACH. We serve majority of the DAX 30 companies. We have 8 strategically located security operations center across the world. We manage close to 600 petabytes of storage. By the way, we grow every month 0.5 petabyte. About 100,000 servers across the world through 16 data centers. And we're operating in 20 countries. Not in every country the same, because some of the countries are more delivery organizations, with 28,000 people across the world. Out of the 28,000, about 12.5 sit in Germany. Out of 28,000, 12.5 sit in Germany. So we've shifted that population to be balanced across the world. That is who we are today. A very different company from what we were 3 years ago, with a clear portfolio, which I will expand on in a few minutes, and a clear path to value creation as we go forward. We operate as this IT services company in a very buoyant and a very fast-moving market environment. You heard Tim talk about digitize, 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 where all of our customers are on that path. Digitization is a matter of survival now. And that drives a lot of the consumption and a lot of the spend in the marketplace. Now, the buyers are changing as well, from not only being the CIO into more of a business line managers. So the guys like Srini, who are making the decisions, how do they digitize their companies? So we had to expand our customer contacts and our go-to-market to cover these business leaders in the marketplace. Of course, COVID accelerated the investments. Initially, it froze everything in 2020, but it is accelerating digitization as we go forward. No doubt about that. And cloud, as the biggest technology in terms of adoption, is the enabler of digitization as we go forward. Now that gives the European countries, the European market at about 4 to 5% growth going forward. And it gives us an opportunity because only 10% of Germany has been digitized so far. So it's a huge opportunity to come going forward. There's also this European sentiment of sovereignty that's becoming stronger and stronger and stronger. And this is an opportunity for us, being a European player. It is not just in Germany, it's across the European European Union member states, and it's accelerating. And of course, data protection, security continues to be a very, very big topic. So those are the dynamics in the marketplace. So the question is, why T-Systems? How can T-Systems participate in this? So again, repeating some of the things I said. Number one, we are a big player. We are number 1 in Germany. We're bigger than our competitors. DXC, Accenture, we're equal in share, by the way, with IBM. So we share the number 1 spot before IBM splits the company. After that, we will become number 1, again, undisputed number 1. And we're number 2 in DACH. And in several select countries, we're in the top 10. So we are a player with credibility. The second thing is we have proven market leadership and engineering capability when it comes to infrastructure management, transition to cloud, and digital capability. And I'll use a few examples as I go through the presentation. Third, we have the industry expertise, especially in the industries that we have selected. We have deep knowledge how these customers work. We have deep industry solutions. And we have horizontal platforms that can apply to any industry. And lastly, we have a very long-standing client relationships. Just last year in fourth quarter, we renewed over $2 billion worth of contracts that extend our relationships with the like of Shell, DPDHL, Heineken, Adidas for another 5, 7, 10 years, after having a relationship for over 10 years. That is a proof point how customers trust us. But I think it's best to hear from customers themselves. Can we play the video, please?
Adel, your team, you know very well how we work as an industry, but also as a company. So that expertise is much appreciated.
We had a close relationship, and that was the key issue. When we were looking at the Corona app, now it's one of the most accepted apps in the world.
To really understand what are the pain points of Heineken. Secondly, help us to drive innovative thinking and bring experience from other industry, from other customers. Hey, Heineken, maybe this is relevant for you. And last but not least, I think if we really want to accelerate the future, we need to find plans to, I call co-invest, to invest together in that future in longer term arrangements, longer term partnerships like you and I, you and we have between our two companies, and make sure that we both build that future.
I will never forget this. I think this was a Sunday call with the two ministers and Tim Höttges and Christian Klein from SAP. And you know, this willingness not only to jump in, but also to get the things moved forward, to speed it up together. And I really enjoyed it, and I still enjoy it. It's not, I mean, there were, I think, let me put it in a different word. I think it's really an example how infrastructure projects, how cooperation between the regulator and so the public side and the corporate side really can work in a wonderful way.
So now let me talk about this new strategy that I keep alluding to, which is unevolved from where we were. There are 5 pillars to this new strategy. Number 1, you'll hear me say this over and over again, focus, 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 focus. Just like Tim says, digitize. We are about focus right now. And the focus for us is to be the number 1 player in Germany and focused on DACH and other select countries around the world. So we are not spreading ourselves thin by covering every country in the continents. We are focusing where we want to play, with the biggest focus in Germany and DACH as a region. That's number 1. Number 2, we want to be the leader and maintain our leaderships in 3 to 5 industries with deep industry solutions and a portfolio of horizontal solutions that apply to any industry. Number 3, historically, we have focused on the very large multinational companies, and we will continue to do that. We will protect our space and our base of these large international companies. But there is a massive opportunity in the market to focus on the 1 to 5 billion euro companies that are struggling to digitize, struggling to drive themselves forward. That is a big opportunity we haven't tapped to in the past. That's going to be a focus area. The 4th area is we are positioning ourselves as a strong local partner for our customers. The customers we work with, they have access to the entire management team. They have our mobile numbers. They can call us at any time, and that gives them confidence that the one they're partnering with is not somebody who's sitting in the United States or in Asia somewhere. It's somebody local in the countries where we play. And finally, sovereignty and security is a big differentiator that we bring to the marketplace. Given where we come from as a German headquartered company, we understand what data privacy means. We build it into our solutions. We understand what sovereignty means. So then if you look on the left-hand side, you can, on the right-hand side, your right-hand side, you see how does this portfolio come together, and you'll see simplification there. First, you see the industries that we focus on. Right now, we picked the 4 industries being automotive, public health, and public transport. But of course, we have other emerging industries that we cover. And our portfolio now consists of 4 straightforward elements: advisory service, advising clients on their digitization strategy. This is based on our Datacon company, a fully owned subsidiary of T-Systems. Driving the transformation agenda with the CEOs and the C-level executives that then opens up the door for our cloud services, hybrid, multi-cloud, cloud capabilities, our digital enabler capability with over 7,000 experts in writing software and digitizing and automating and process improvements, and security being embedded in everything we do. That is our evolved portfolio. It's pretty straightforward. It's very clear where we need to focus. Now, what I will do is I will run through each of these portfolios very, very quickly, given the time constraint that we have. And then, of course, get into how do we deliver over the next 4 years our financial, in terms of our financial commitments. So first, cloud services. Everybody knows the market is driving very hard into public cloud, but also hybrid clouds. There is speed of implementation that's happened over the last 18 months that we have not seen in years. And that will continue because cloud is the foundation where you digitize from. It's not only public cloud, it's also private cloud. It's also hybrid clouds, it's edge solutions. And what we have created here is a platform that gives the clients the flexibility and the different platforms that they need in order to digitize. So we have partnership with public cloud companies. You've heard our partnership with AWS, with Microsoft, with Google, that are substantial in nature for us. We have our own platforms that we deliver, OTC being one of our public cloud solutions as well, and our private cloud solutions. We have our Edge Air that's been deployed in many campuses across the world, driving some mission-critical, real-time compute and store environments in order to drive data ingestion and AI capabilities to improve the results for our clients. On top of these platforms, we provide migration services to help clients move, including, of course, after that, cloud application services. This is a big business for us. And there, we have a period of time for the next 3 years where we're bleeding away some of the legacy, like end user services, where we still have about 150 million to shut down. We didn't shut everything down. We're bleeding off the contracts that we have. But also some of the legacy classical IT businesses that we have, which makes it difficult for us to grow. On the other hand, our public cloud, our private cloud businesses are growing at faster than market rates, as we've demonstrated already over the last 3 years. If you think about our digital enabler, we talked about digitization. We talked that this is a priority for majority of the companies. Here, we focused ourselves with 7,000 plus experts across the world to start with industry solutions and services, things like the connected back end of the car. For the Daimler customers here, Mercedes Me, that is an application that T-Systems has developed with Daimler that's deployed across millions and millions of cars. As an example, our police solutions, our hospital solutions, those are industry-specific solutions that drive digitization. They're fueled by innovation in some of the core technologies, like AI, like 5G. The 5G campus question that Claudia got, it's not just putting the network in, it's how do you then deploy applications that use that network? Blockchain, as some of the innovative areas that we drive. Third area is building platforms that we can repeat and scale, so we don't have to invent it every time. For example, big data platforms. So our data engineers don't have to think about what platform, they focus on what are the applications and how do I deploy them. And finally, it's all about transforming our customers in the cloud landscapes. That is another big area for us as we go forward. Then, if you look about embedded security, just last 2 weeks, we've heard about the news of a pipeline company in the United States being held hostage with some of the hackers. That is not unique. Some of it makes it to the press, some of it doesn't. But every company, as they digitize, as they go into the cloud, they need security. And here we have a survey on the left-hand side from the City CIO survey in 2020 that continues to say that IT security is going to be the biggest area where CIOs are going to be spending over the next several years. And we have a platform that actually takes you throughout the value chain of security, identifying, protecting, detecting, responding, and recovering. We have some of the world's most sophisticated SOCs deployed in strategic areas. We deal, get ready, with 80 million attacks per day on our honeypot infrastructure that we deployed across the world. So we can learn the vectors. We know where they're coming. And our value proposition was having security in the network and IT is very unique in the marketplace. We can see the traffic coming through our networks, and we can apply it to the IT environments, which is very unique. Now, I'm going to skip advisory, giving the timing, and I'm going to go ahead and reinforce what I said earlier. We have a clear strategy and path to continue to build value. One of them, of course, is to deliver additional cost savings. And what we're committing to you is, over the next planning period, we'll deliver another 200 million of IDC reductions. The next wave of IDC reductions is a little bit different than the past. We're now focusing deeper in our delivery, automation, process improvements, toolings. We select ServiceNow as our digitization workflow management system across the entire company. There's still some left in G&A and sales and our real estate. We reduced our real estate, by the way, in the beginning of this year by 50%. We are not going back to work the way we did. We're going into a very different a new way of working, where we have collaboration areas, development areas in big buildings where people come in and work together, and we tell them, if you don't have things to do with your teams, you can work from wherever you want. So we're committing 200 million worth of savings over the next planning period. And of course, all this kind of comes together to give us the new strategy. Our vision is to be the most reliable IT service provider with best technology and industry expertise. And our mission is to help our clients on their digital journeys. We are the European IT service leader in the markets where we choose to play. And we take our customers, we partner with them on a journey into modern, secure, resilient digital environments with 3 differentiators: data sovereignty, innovation in an open ecosystem, and secure operational excellence. And our enablers are learning, continuous improvement. It's our people, #people make it happen, and sustainability and diversity that Claudia already covered. We're all part of that plan that Claudia was talking about earlier. That is our strategy as we go forward. Then what does it deliver then? This is our commitment for the next 4 years. 1, revenue. We are focusing to deliver slight growth. We have that balance point we're reaching between our legacy and our new businesses, our growth businesses, where it's going to pass the 50% threshold, which should deliver us growth going forward. Second, EBITDA growth of 5%. Third, our margin, EBITDA, will expand another 2 points in this planning period, and 200 million in indirect costs, as I described. Cash CapEx, we will keep stable. There is no plan to go back again to where we were after we reduced it from about 300 to about mid 200s, and delivering cash contribution positive in the planning period. This is for the new T-Systems. The old T-Systems, we did it. We demonstrated we could do it. This is now for the new T-Systems. So, Hannes, that's our plan. And I think I'm ready for Q&A now.
Great plan. Please join me for the Q&A over here. Thank you, Adel. Okay, very good. The times change and we change with them, and that's the challenge. But it's amazing what has been done and what has been created to take us forward here. So, very good. I have the first question here from Steve at Redburn. Steve.
Yeah, thanks very much for the presentation. I think we all probably thought 3 years ago you had one of the toughest jobs in DT. I think you probably still have one of the toughest jobs in DT, and it seems like you're doing pretty well in a tough market. Can you maybe just help us understand the trajectory of those financial metrics you set out? Because when you look at it, I guess that my sense is that as you burn off legacy and move into new collaborations on cloud, that's kind of a negative gross margin mix, but maybe not. You declined in 5% in Q1. So when do you think you can get to growth? And just give us a sense of, I guess the 5% compound EBITDA is probably a bit back end loaded, maybe not, but that would be helpful as well. And then just finally, just on, I guess your division is probably in the front line of COVID and what you've seen in the last 12 months, what you expect in the next 12, what your enterprise customers are telling you, how the business has changed through this process, and what you're anticipating for the next 12 months in terms of challenges as we come out of COVID would be really interesting to hear as well. Thanks.
Very good. Well, Steve, so let me start kind of with the last part of your question, and then I'll build it up backwards. So what are we seeing in terms of COVID dynamics? So first of all, we are seeing customers spending again, and we started to see that happening in towards the end of 2020, especially our industries where we are very concentrated. As I say, 60% of our business concentrated in automotive, manufacturing, industrial, travel, and transportation. So we've seen that come back. And as a matter of fact, one of our biggest disappointments over the last 3 years was our digital solutions that grew strong from 18 to 19, then declined for us in 2020. And now in the first 4 months of the year, it's up towards 10% growth. So we're seeing that come back. Now, I wouldn't celebrate yet and say that the market has recovered. I think it's still very measured. There are very clear plans to continue to spend. Restarted the projects. People are pushing forward with their digital agendas, if you will. But I'm still skeptical. I think it will be a very gradual recovery, and people will still prioritize quite heavily where they want to spend. So like security would be front and center. Cloud movement would be front and center. But other areas like changing your SAP systems is something that people are thinking more carefully about. So that's what we've seen. Now, in terms of the metrics and how it comes, especially on the top line, look, we've seen very good growth in the growth areas, and you've seen that we've moved the needle to being almost 50% of our portfolio now made out of growth. Every single element of our growth portfolio is making money. That was not the case in 2018. As a matter of fact, even public cloud at that point was losing quite significant amount of money. So over the last 3 years, we moved them into making money without starving an investment in them. So as we go forward, the growth in these units is accretive to us on a bottom line and top line. That's why getting 1% growth is super critical, right? Because that does come with incremental EBITDA and incremental cash contribution, different than what it was in the past. And the margins for us, they differ. The digital solutions margin, for example, the work that we do with the governments, the work that we do with EU, you guys have heard about the Corona Warn app that we did with SAP, the vaccination backends that we've deployed across. These are good projects for us. They generate reasonable return for us. And the issue for us is, how do we expand the margin further by creating more repeatable assets? So the Corona Warn app that we built, we've used those assets to go build other areas, like an enterprise tracking system for folks in manufacturing, right? Who want to deploy a more closer proximity tracking on who's standing where. We use that platform. You know, there's work going on around, you know, vaccination sharing across the EU countries. We reused a lot of the work that we've done in the past in order to do it. And we want to do that more and more. So not having to recreate everything, having more built up assets that we can build, that we can reuse, and that expands the margin going forward. So the tricky part is for me is, can we sustain digital solutions growth that we have demonstrated in the first 4 months? If we can, growth is a real achievable number. If we can't, if the market changes and we're not fast enough in changing, in shifting more and more towards these innovative platforms, then we will struggle to show the growth going forward. But I'm optimistic in terms of the financials and how they come across with those growth profile.
Yeah, and you've given EBITDA guidance, and we said
Yes.
this year will be stable, and then that implies that 22, 23, 24 will be better than
And
stable.
it's not back-end loaded, Steve, so it's not all sitting in 2024, but it is, you know, it is, we plan for gradual recovery as we go forward.
Okay, well, thank you, Steve. And next is Polo. Hi, Polo again.
Yeah, hi. Hi, Adel. Hope you're keeping well. Thanks very much for the presentation. Just had a few different questions. The first one is really just about your peer group. You made the point that you had a leading position in DAC, but who do you see as your main competitors? And are there any listed companies that you think resemble T-Systems? Second question is really just a clarification on client concentration. You said that you're focused on multinationals, but can you maybe just give us some sense in terms of what percentage of revenues your top 10 clients account for? And then my third question is really just a bigger picture question in terms of what do you see as the benefits of T-Systems being part of DT Group?
Okay, Polo, good to see you, by the way. Hope you're doing well. I miss our workouts in London, but hope everything is all right. So, Polo, first of all, it's a very good question on the peers, right? So we have repositioning the company to not be compared to the likes of DXC, IBM, Accenture, the very large global players that have a different scale and go very much after this very large horizontal kind of place, right? We've focused ourselves on more of the European leaders. We include Atos in that, of course, because they're very present in Europe, Capgemini, of course, but companies like Sopra, like Reply, right? Like Indra, right? Those are companies, and since we're big in Spain, we do look at Indra as a key competitor. So that is who we compare ourselves to. And by the way, when we look at the performance of these companies, the median performance in 2020 was about 1% revenue growth and minus 9% EBITDA growth, that unit that I just described, with a few other European companies. So we did actually better than competition on EBITDA side, because our reported numbers were about minus 2%, but like for like, if you normalize for all of the movements we had, it was flat year on year in EBITDA, but revenue-wise, we were lower because we were minus 1%, normalized with some of the areas. But those are the competitors that we look at going forward. And we just chase less of these big global deals and focus ourselves more on this local opportunity that we have, which are still very large companies. Like I said, DAX 30, we serve most of the DAX 30. We serve a big portion of the Fortune 500, but we serve them from a local perspective when they're buying local things. To answer your question on concentration, we haven't published these numbers everywhere, but I'll tell you this, our top 30 customers make up a big portion of our business, more than 50% of our business. And this is where I see the opportunity, Polo, right? Because out of those top 30, a very small, about 20% of them are the 1 billion to 5 billion revenue euro companies. And if you look at Germany alone, or you look at DACH, the number of this 1 billion to 5 billion companies is much larger from a total market opportunity than the real big multinationals. So we are focusing ourselves with a different go-to-market and an approach to really get traction in that customer segment. And we have some examples already that we've done, right, in several of these customers. And then I guess the last question you had, what is the benefit of T-Systems being within the Deutsche Telekom group? Well, look, it's the following. First, when you think about our entire portfolio of DT, including T-Systems, we are the only company in the world that can offer our customers a true end-to-end capability that covers connectivity, cloud, digital, and security. The security work that we keep talking about is driven by T-Systems, and it's a company, our TSEC company, serves everybody in Deutsche Telekom, right? So although managed and consolidated in T-Systems, it's a big part of Deutsche Telekom. Examples of 5G deployment and private networks. We depend on our colleagues in the network side to deploy the 5G campus. But the use cases in 5G campus is driven by T-Systems, i.e. the autonomous vehicles, i.e. big data, edge solutions, where we deploy, how do you actually capture? We do Daimler's tests, all of the Daimler's hard condition test environments are managed by T-Systems. So we have edge solutions in very harsh areas in the deserts and in North Pole where we capture data through edge solutions, and having network expertise brings a real good consolidated solution to the market. But you know, as I said, we've created this IT services company, right? That's no longer confused kind of what we do, but still quite a bit of opportunity to leverage DT as a whole.
Excellent. Thank you, Adel. And thank you, Apollo, for the questions. And now we have a very short break before we move on to the grand finale and of Thorsten Langheim on group development and Christian Illek on the finance developments. And then they will have a final Q&A, also including Tim Höttges. So we have a short break. We reconvene at 1 p.m. German time, 12 p.m. GMT, 12 GMT, and look forward to seeing you back. Thank you. Thanks, Adel.